Hello, for today's topic, we'll be discussing whether if you were to be earning a 10,000 gross income, would you be able to afford a 1 million property? Generally, you'll be thinking that if you were to be earning $10,000, it should be enough to buy a $1 million condominium. But are these enough and sufficient to conclude on the affordability? Share with you guys the research and calculation so that everyone will have a better idea and to make a more calculated decision. With 10,000 gross income, what is the maximum loan that I can get to purchase a property? What is the maximum property value that I can get to purchase? And how do you calculate the breakdown of various components in the purchase? Number 4, we also check how much cash do I require. So with my video, these are my findings. Every individual purchase is unique. Buying a property usually comes with a property loan to help us offset the main bulk of the purchase, which is usually 75%, the maximum for most of us. And every loan usually depends on two main factors, key factors among others. Number 1 will be the age, and number 2, of course, the income. And the amount of loan, right, will differ if you were to be buying a HDB, EC, and private condominium. This is because we use different methods to compute the loan amount. For example, HDB and EC, you'll be using the MSR, which is 30% of your total gross income, while private condominium will be using a TDSR method, which uses a 55% of the gross income to compute the loan amount. And in order for us to compute the affordability, we have to factor in any deviation of the total purchase amount. So the shortfall amount in cash can be significant, and hence reducing the amount of property that we can potentially purchase. To illustrate, I came up with a simple example. So, for instance, we are a couple, husband and wife. We are both aged 35. We are both employed and we earn a gross income of 5,000 each. And we do not own any property, and this is our very first property. So there's no ABSD, additional buyer stamp duty. The maximum loan tenure will be 30 years based on the weighted average income and age. And based on the 4.5% loan rate, which is a stress test, the maximum loan we can get from ECHDB is 592,000. While the maximum loan we can get for a private condo is 1.085 million. Note the difference in amount here. Based on the maximum loan amount, we then go on to compute the highest property value we can potentially purchase, which is for HDB and EC will be 789,000, and for private condo will be 1.446 million. Sounds good? But that's not enough. I need to do more computation. Now, let us explore. Am I able to afford a 1 million condominium safely? Okay, let us put in table form again as illustrated in the screen. So, as you can see from the table, I have the property $1 million. So, 5% down payment will be 50,000 payable in cash check form to the developer if this were to be a new launch, or if you were to be buying resale, this will be 1% down payment first and later on 4% when you exercise. So you have another 20% down payment later on, which will equate to 200,000. This can be payable by CPF, should you have a sufficient amount in the CPF. Otherwise, it can be payable in cash. Then you have another component here, which is the buyer's stamp duty. Because the property value here is $1 million, so the computation will be 3% of 1 million less of 5,400, which give you 24,600. Then you have legal fee. Legal fee, we have a figure here, $3,000. The figure also depends on which law firm that you engage, but this is the average amount that we have. So total you have 25% down payment plus buyer stamp duty plus legal fee. All in all, you have 277,600 payable by CPF and by cash combined. So with 75% loan, we have 750,000. This will be the different component to finance a 1 million property. But the most important question here is, how much cash do I actually need to purchase the $1 million condominium? So here's the breakdown. So I have it in the table file, as you can see from the screen. Total 20% down payment plus buy stamp duty plus legal fee. This can be paid by CPF. So let's take a look. The total amount will be 227,600. So in the example that I've given, the ordinary account CPF would be 150,000. Therefore, the deviation to pay in cash would be 77,600. So plus back the 5% down payment in cash earlier, which is 50,000. So the total cash payable would be 127,600. And in this example, with 10,000 gross income, can you buy a 1 million condominium? The answer is yes. If the cash on hand is 127,600 or more. However, buying a property requires extra cash for renovation and buying of furniture and moving in fees, which we have yet to factor in. So for example, if you were to be buying a new launch that is built in progress condominium, which we will get a key in about 3 to 4 years time, so we still have a late time to save up. But if that were the case, we also have to factor in the inflation rate. As new launch condo comes in with built-in wardrobe and kitchen cabinet, hence a rough estimation for a simple renovation might cost you 50,000 to 70,000 plus minus, depending on the extensive renovation that you have engaged or the brand of the furniture that you are buying. In my illustration, the buyers are first-time buyer and they do not have any existing house to sell. Therefore, I cannot include and add on to the profit of the existing house if they were to sell. Or if they were to actually buy as a second property, right, there will be additional A, B, S, D. So there are several other factors that we have to factor in, depending whether first timer, second timer, is it the first property, second property as well. My example here, I did not actually clarify extra cash on hand or asset on hand that we can use to pledge to get more loan. Then the amount of loan that you can get will greatly differ depending on your age, depending on your income. So if you were to be earning a lower income, of course the amount of loan would be lower, and therefore you would require more cash on hand. And another scenario is if you were to be older than the example that I've given here, then you also affect the amount of loan that you will get from the bank. It will be lower, and therefore you would also require to pay more in cash. If you have other cash on hand or investment that you can cash up to put into your property purchase, this will not be an issue as well. In conclusion, buying a property usually is one of the most major decision that you will ever make. One of the highest expense ticket that you ever make in your lifetime too. So before we actually make that decision, we need to do a thorough calculation and weighted the risks and the pros, and not forgetting not to overstretch our budget and to save for the rainy days as well. So if you were to be thinking of buying your first home, or upgrading to your next home, or downsizing to your next home, or buying a second property for investment, I will be very happy to actually assist you with a non-obligatory property assessment and calculation just for you and your family. And if you have been watching this video, to connect with me over the link, and I will see you real soon. And this is Joey, always happy to help. By the way, if you have been watching my video, I hope you have enjoyed the content and have benefited from the information that I have just shared. And I hope that you can give me a thumbs up, and I hope that you can share with your friends and family. Like and share,